Good evening, everyone. Welcome to yet another session on technical analysis for profits. I'm Raja Venkatraman out here, and today I welcome you all to this webinar, which is titled Momentum Concepts Demystified. Well, you're having a very tough market, isn't it? Sometimes it's running away, sometimes it's halting. So, what's your take? Do you all belong to this group called Market में Momentum नहीं है? Or whether you feel that a particular stock or index has lost its momentum, and there are always the TV anchors who keep saying momentum is building up, momentum is building up. So what exactly is this momentum all about? How do you profit from this chatter? How does it impact the prices? Well, this is what I'm about to share with you today as part of this webinar on what exactly you mean by momentum, how it impacts the way we perceive the market trends. Okay, guys and girls, of course. Before we proceed, can you all confirm to me if the audio and the video feed is in order so that I know that all the participants are having no technical issues? Great. Let's get started. There are a few people out here who are new to the Growth Avenues scheme of things. Growth Avenues is an organization which has been founded by Dr. C.K. Narayan. Many of you are aware he's been there in this technical field for more than 37 years, and he's a pillar on which Growth Avenue stands. Dr. Narayan has been awarded the Lifetime Achievement in Technical Analysis, and he continues to ensure that we are at the heart of innovation. Technical analysis for profits is a very unique concept which is not there anywhere in India, where an advisory house actually shares with you what is the knowledge and concept of technical analysis which is there in the market today. Mind you, our programs are aimed at enabling you to understand the market better. This entire premise of technical analysis for profits is to help you understand and revisit those points which are there in the concept of technical analysis, which we sometimes tend to ignore during our trading and investing journey. So this is what technical analysis for profits is all about. And for those who don't know much about Growth Avenues, I would like to say that we are a well diversified house. Here under Growth Avenues, we advise private individuals, HNIs, and corporate houses on how to analyze and interpret the market readings across asset classes and across time frames. 2. We are into training and certification of traders. We tell traders, RMs, dealers how to analyze the market, how to interpret the market, how to position yourself as a person with knowledge. Because in today's times, knowledge is going to pave the way for your profits and your wealth building. Then for those who are very much interested in making trading their profession and actually want to survive on trading, for them we have trader mentoring programs under the tutelage of Dr. Narayan, who will guide you on various trading nuances, various trading methodologies, and of course the most important aspect of the entire trading setup, which is you. So his trader mentoring programs are unique. People travel all over the world, if you have heard of. They travel to US, they travel to Australia. But if you can look in India, you will find very few people who will actually tell you how was the market, where is the market, and where is it going. All these three paradigms of the market shift will be taught to you by Dr. Narayan. and he'll ensure that you're able to face markets irrespective of any kind of volatility. And for those who are not interested to do these kind of activities, then we are also involved in discretionary management of trading accounts. You can contact our office for more details, and we will give you details about all the various kinds of bouquet of services which we are offering under Growth Avenues. With that, I now move on to what are the topics for today. What is momentum? Then we will look at what are the triggers for momentum. Then the most important question, why study momentum at all? And when we answer this question, then you would like to know how to profit from it. And for profiting from it, you should know how to interpret the momentum. And to summarize it all, we will say what is this objective of this entire exercise. And for doing all the points which I talked to you about, there is a very important concept called momentum indicators, which actually tell you what is the momentum of the market right now. And we'll be discussing one of the momentum indicators today. And I'll also highlight to you what are the various types of momentum indicators which are there in the market. And as part of your software, it will be readily available. Okay, any queries so far? I don't think there should be any. If yes, you can keep typing into the chat box. We have a unique webinar facility where you can post your queries, and as and when the point comes out, I'll answer them. What is momentum? Momentum is increase in pace of any security. By pace we mean the pace at which the price moves, whether there is a sudden spurt or is it moving gradually. The pace is very critical because if there is no momentum, then the prices are going to are going to be stationary, and as a result you are not going to make any profits. Understanding the concept of momentum is very critical so that you are able to choose the right stock and time your entry and exit. So what are the triggers for momentum? One of the triggers is volumes. Then you have the price combined with news, or you have a combination of both. So these are the various triggers which actually provide the momentum. If you could see here, the volumes are drying up. This is the first indication. And then the price starts showing signs of reversal. This is the second indication. And then the news steps in. This is the chart of Apollo Tyre. And then the combination of the entire three elements, volume, price and news, brings it down in a rapid force. So this is the power of momentum. Ideally, in this at this high you should be looking to exit because the rise is not supported by volumes. For those who have been adept in technicals would have ideally done this at this point in time, and for those who have learned candlesticks will know what is this phase trying to tell you. Okay, talking about phases, Let's try and understand what are the various phases. In trading or investing parlance, momentum is a word which is commonly used to describe the rate at which price trends. So to understand the concept of trend, let's move on to our next chart. Wow, this chart has some trends. So how do we identify a trend? Ideally, prices either move up or down or sideways. So here, this is the downward phase where, as per Dow theory, you are forming lower highs and you're forming lower lows. You can see this. So this phase is a downward phase, and where the momentum is quite strong and it is eventually dragging the prices lower. Then we enter an absence of trend phase. In technical analysis, there is no uptrend, there is no sideways trend. It's a colloquial term. There are only two phases. One is uptrend or downtrend. So a downtrend is called, I'm referring to as downward phase, and an absence of trend, which is the sideways or consolidation as people say, and this is an upward phase. So these are the three phases of any trend. So that's what one needs to understand when one looks at the chart. When any change in direction occurs, we say that the prices have changed momentum. For example, at this spot, when you get this long green candle, we say that the downward momentum has now shifted to the upside. So here ideally you should be going long because you're making higher lows and higher highs. Higher highs and higher lows are being formed. So this indicates that prices are in an uptrend. Is it clear so far? Okay, let me give you an analogy. Imagine a car traveling at 60 miles per hour. You'd say that is a car speed. Even if the car slows down, we would say that it is decelerating. However, it is still traveling in the same direction. But if the car has to come back, then it has to take a roundabout and head in the opposite direction. That's where you say that the car is now heading back. Similarly, in the markets, when the price trend is not rising as fast as it was at an earlier point, we say it's losing momentum or it's decelerating. In prices, losing momentum can eventually result in a trend reversal. For example, if you see this chart of Tata Motors, you can see here this decline. Eventually, there was no interest in selling, and the selling was absorbed, and then the prices started rising. So what happened was this entire selling was absorbed because there was lack of participation on the downside, and then eventually you saw a 100-point rise. So the net result of this analogy is changes in momentum occurs before the change in direction. What do I mean by that? This is the first phase where the prices are heading lower, and then when I mean changes in momentum occurs before the changes in direction, this is the change in momentum. This is the change in momentum. And then eventually, as price starts rising, there is a change in direction. So first there is a change in momentum, and then there is a change in direction. Is it clear now? Alright, let's go further. Why study momentum? Helps in identification of the emergence of a trend. Combining price with volumes helps in quick decision making. We all saw that in the Apollo tire chart, like how you saw the volumes dry up and immediately changed your stance from a buy to a neutral and then eventually to a sell. Momentum tells us quickly if there is any emotional excitement. By emotional excitement, we mean whether people have really gotten bullish. Few weeks back, everyone was interested only to sell Tata Motors. But what happened in the last 10 days? The sudden shift. And this shift is what we refer to as the emotional excitement. Eventually, prices are a reflection of the individuals, right? All of us are representing our emotion through our trading action. And this representation is what is captured in the prices. So, this is what is captured through momentum, and combination of price with momentum helps us gain significant idea on why is the need to read momentum. What is momentum? We know it is a tool to capture the price movement, the changes in direction before it really starts moving. Momentum is a derivation. It is derived by applying certain formulae based on the price movement. What are the elements of price? Open, high, low, close. So using these parameters, a momentum formula is derived, and today there are close to 400 momentum indicators. They help us identify reversals so that we are able to participate in the market at the right point in time. How do you participate in the market? You either enter a trade or you exit a trade. In between these two phases, you are actually not doing anything. So that's what we saw: the downward phase, the absence of trend phase, and the upward phase. Correlating momentum. If you marry momentum with prices, you will be able to have a more holistic view on the correct picture of the stock. We don't want to take a prejudice view. Instead, if you see the price along with the momentum as technical analysts or as traders, you will be able to interpret the market reading much better. Okay, before I proceed further, let me give you a glimpse of what are the exciting things happening at Growth Avenues. This is a program called Comprehensive Technical Analysis. What I am discussing with you today is one of those many nuggets which are discussed by Dr. Narayan in detail in this webinar called Comprehensive Technical Analysis. This is a webcast where we offer this webcast to the users who will be able to at a price, of course, where you can actually see the recording for 3 months and get an understanding of how to read the charts much better. We cover various elements in this technical analysis webcast. All the types of line studies are covered, all the traditional patterns are covered, all the important candlestick patterns are covered, oscillators are covered in detail, telling you how the entire concept of oscillator is needed to be understood so that you can analyze the markets in a much better way. Then Dr. Narayan starts the entire webcast by giving you the foundation of technical analysis. He tells you why it's needed, how it is to be approached, and why price is the most important aspect in the markets today. So all this is covered as part of the CTA webcast, and that's not all. The one of the key USPs of this CTA webcast is there will be two support webinars where we'll be enabling your understanding by giving you live examples during the program, where we'll show you how you could use these studies and do some trading, or at least find out how this tool works. Then Dr. Narayan will be taking one session where he will summarize the whole program. He will take you through analysis and putting up a framework where you'll be able to interpret the markets in a much better way. So the entire concept of technical analysis is covered in this exhaustive program. There are many programs which sell you the software, but Growth Avenues does not sell you any software. Growth Avenues sells you the concept. It sells you a concept where you can use it on any software: Advanced Gate, Metastock, AMI Broker, eSignal, TradingView, NetDanya, be it anything. Growth Avenues webinar are uniform. They are universal. Our webinars are aimed to give you complete satisfaction in knowledge about the concept so that you could go out and ensure that you are able to interpret the market in a much better way. So for people who are intending to get on to this line and enjoy this fascinating study of technical analysis, this is a very unique concept of comprehensive technical analysis webcast. And the other USP of Growth Avenues is its value for money. Why? Because we offer you lifetime email support. Any queries on anything under the sun, if you have done the webinar with us or if you have done this webcast with us, we will give you complete support irrespective of when you have done. We want to enable you so that you could go out there and give a call and stand by it. That is the confidence people get when they train with us. That is the confidence people get when they see this webcast. Webcast is very useful because you could see the webcast and immediately practice it on the software, unlike a live webinar where a sir will be actually talking, but you would not be able to do it simultaneously. However, on the webcast, you have much better convenience, and it would be a fantastic way for people to know how exactly technical analysis should be learned and how exactly technical analysis can benefit you as a trader or investor. So, what are momentum indicators? We all have heard of them, right? Why do you need momentum indicators? We talked about the need for understanding momentum, need for studying momentum, etc., etc., etc. Momentum indicators is like a dashboard. It's like a dashboard of your car where you are able to see what's happening with your vehicle, because it's not possible for you when you're driving the car to go down and see whether there is enough petrol in your vehicle, or whether there is enough oil in your engine or whether the speed is appropriate. So, similarly, you need a dashboard to tell you what is the market doing. Price movement, reading price movement is what technical analysis is all about. But it cannot be done only by reading price. You need some kind of support function. And that's what momentum indicators does. It does a support function. It tells whether the price is going to move up, going to move down, or it's going to stagnate. So that's what we'll have to do when we apply momentum indicators, because prices are not stationary. They keep moving up, moving down, moving sideways. So based on the price movement, the oscillators are calculated. So in the markets today, there are broadly two kinds of indicators. Either they are banded or they are non-banded. By banded, I mean it has got an upper boundary and a lower boundary. And by non-banded, I mean it has a middle path which is set at 0, and then the readings keep moving up and down from 0, something like a moving average. All right. I just wanted to show you the same example which we saw of Tata Motors with an indicator. I have chosen RSI today. You could see that the RSI is heading lower. This RSI is heading lower. Prices are heading lower. So it's giving you enough indication. And once you reach this stage, there is some confusion emerging here. If you are the one with short, so you should be looking. I'll discuss sometime later how you could have exited this stock sooner, but now you can see that there is actually no trend. Close to 3 to 4 days, prices are stagnating, and so is the RSI. And then there is a sudden spike upwards, which says that there is something else going on. And then the prices takes off, and so is the RSI. So that's how you get a clarity on the price movement. So once such movements happen, you are able to participate in the market. You know that the RSI is heading up, and you could actually look to participate. So as long as the RSI remains up, you would have exited your trade. Then there is a pullback. But either wait here, or you would have again traded long. Once there is a spike in RSI, the same candle happened on this day, and the prices again went around 50 points from this level. So what happens is, through this box which you add at the base of your chart, you are actually getting better clarity. There are various elements of momentum indicators which are discussed by Dr. Narayan in his webcast Profiting with Momentum, where he tells you various concepts which will help you identify the markets better. Like for example, at this spot, you would have got a concept called oversold, which could have helped you identify the stocks in a much better way, and your short position you would have exited much earlier. So that's how the concept of momentum indicators work. What are the various types of momentum indicators? This is just to give you maybe 5 to 10% of them, because these are the most popular ones. We have the Chandey momentum oscillator, we have the commodity selection index, we have the ROC, the MACD, parabolic SAR, stochastics, you got the average directional index. So these are all the types of indicators which are available in the market today and which are commonly used, but there are lots more. If you load your software, you could see many types of indicators, but then all of them have a specific derived formulae which needs to be addressed so that your understanding of the reading goes up much better. Today I'll show you one such momentum indicator. It's called RSI. RSI is a very popular tool and used by many traders, investors, analysts. It was an indicator which was developed by J. Wells Wilder. He had introduced in his book New Concepts in Technical Trading in the year 1978. What RSI does is it compares the gains and losses of the stock or security and then determines overbought and oversold conditions. By overbought and oversold conditions we mean a place like you can see here where the security has been purchased many times over and would now seek to rest after a strong rise. In the same way, by oversold we mean the sharp decline in prices which would now come to rest and it would opt for a reversal. So this is a case of overbought and this is a case of oversold. So when a price reaches this zone, one should immediately get alerted about a possible reversal in the making. So let's see how they are calculated. RSI is calculated by dividing the average gains of the look back period. What is look back period? Look back period refers to the period which is considered for calculating the gains and the loss. So ideally the default setting is 14 period, which is used to calculate the average gains and the loss. So this is the first step in RSI, is to find out the relative strength of the security at that point in time. So if you are on day 14, so it would take 14 days prior to this day, to today. So if you move tomorrow, then it will shift one day forward. So that way you are calculating the gain in price and dividing it by the number of days which you have set as 14, which is the default of the software, and then similarly you are dividing it by the loss to gain the relative strength. Then you are tying it to a band. You could see here this is a banded oscillator. There are two bands which have been drawn that shows you that this price is going to move within this band. It would go near zero, but it will never touch zero. Why will it never touch zero is because of this formula. You're subtracting it from 100. So it's always less than 100 or more than zero. See here. So 100 minus 100 upon 1 minus RS. So this is step 1. You bind it to 100 so that it forms a percentage and it keeps moving. So you have this is your overbought and this is your oversold. Is it clear so far? Any queries? I could pause for a minute to see if anyone has any queries on this. Great. So like I mentioned, RSI is main job is to calculate overbought and oversold conditions. So one could see here this is a chart where the prices are rising, they have hit the overbought condition, and then once it hits the overbought condition, you need to get alert. This is similar to the chart we saw in Tata Motors. Again, there's a failed attempt. One thing we should remember is, along with momentum indicators, you should apply other elements of technical analysis. Like you have a shooting star here. Then there are other elements like divergences which are appearing here. So once you combine all the signal, so at the overbought you're getting a divergence, so that actually ends the rise. So this is what happened here. From 1250, prices have gone down to 900. This chart of Bharat Forge. You can see here how powerful momentum indicators is. Just imagine seeing this chart without a momentum indicator. You'd still be bullish because you're seeing a fleet of green candles. But once you put the indicator on, bingo, it flashes you signs of danger. Combine it with your reading of candlesticks, you get even more clarity. So that's how you got to combine various aspects of your technical analysis to ensure that you are timing your entry and exit. Okay, this is an overbought example. This is again an oversold example. This is of Nifty. There had been claims of 7200 or some such figure where people felt that this is not the ideal way to trade the market, or rather you should not stay long in the market. And look what Nifty did. It hit oversold. After hitting oversold, It produced a divergence, and it ate up all the people who continued to have the short view. So the sharp rise which we have seen, some of the contributors to this are the short people, because they thought that they have been hearing on WhatsApp and all the khabars. Technical analysis helps to keep you away from all these khabars, because khabar can sometimes be your cover. On a lighter note, so it's best that you are armed with something more credible, more scientific, and more artistic. So, talking about the exciting benefits you get from learning momentum, how do you think you should be profiting from momentum time and again? We don't want to profit in one trade or in two trades. You need to profit in multiple trades. What is the aim of a trader? Can anyone tell me? An aim of a trader, of course, is to make profits. But what use is that profit of if you're going to make the profit in this week and give it away next week? So the answer should be the aim of any trader should be to make profits day after day, year after year, so that you have a positive expectancy. It doesn't matter if you lose a day, if you have a losing day, or if you have a profitable day. What matters is that at the end of your when you file your return, you say that I have made profits. Point number one. Point number two, I have made more profits than last year. And point number three, I am satisfied with the profits I have made. So once you're able to answer all these three things in the positive mind, in the positive way, you will be able to tell that you have been trading much better. Trading just watching prices is difficult, hence, technical analysis enables and eases the way one could trade the market. So, these concepts with very interesting ways to see the market is done in our webcast Profiting with Momentum, where Dr. Narayan has very nicely given out details on some of the brief points which I discussed, which is overbought, oversold conditions. He talks about various other indicators like average directional index, PSAR. He talks of PSAR is the parabolic stop and reverse system. He talks about moving average, convergence, divergence. So what he does is he tries to show you various kinds of momentum indicators, how to play with them, how to spot opportunities in them, how to use a stochastic, how to form strategies, how to analyze the market. These are all things which he uses on a day-to-day basis. This is out of his years of hard work which he has culled and is willing to share with you. Growth Avenues is an organization that shares its learning because Dr. Narayan believes that foreign authors have shared their knowledge. Profits are there for everyone in the market. So by sharing with you, my share of profit is not going to go down. So that's why he's willing to share with you the learnings which he has made. And even today, he continues to read books. He continues to foray into various new technologies and come out with methods. And that's what we continue to show you during our webinars. This is the coverage of this webcast. you can contact our office and get hold of this webcast. Very unique and interesting. It tells you how to deal with overbought, oversold areas, what exactly is momentum indicators. He'll be elaborating it in much more detail. He will tell you how to trade across multiple time frames. So this is a complete momentum oriented program. Momentum is a very loosely understood concept in technical analysis. However, if you are interested to make profit consistently, deep understanding of momentum is critical, and that is what this webcast is all about. Why do a webinar with growth avenues? Well, some of you have done it, but what about the others? It is the most value for money program. We offer fantastic tech support. Any issues with the webinar, we'll address it during the webinar or the webcast. We have live chat service. You can post in your queries. You can send in your mail. The queries are answered by mail. We'll send you the examples. If any example sent by you is incorrect, we'll have it corrected and send you the right one so that your understanding goes up multifold. Our webinars can be viewed on mobile. This webcast can be viewed on mobile, on your desktop, on your laptop, on your iPads, be it any device. Our webinars can be viewed, and of course, time is money. So if you are trading every day, then this is a program which you should be attending. We have live webinars which are scheduled off and on. If you are not able to attend them, then you can take a recording and get hold of momentum concepts which are very beautifully illustrated in this program. With that, I come to an end of this webinar. If there are any questions regarding this fantastic webcast, I would like to answer them. If there are any questions regarding this concept of momentum, I am ready to answer it. Otherwise, we are ending the webinar in the next 2 minutes.